Hello traders, Gary Wagner here. Just about 11:10 in Honolulu, 4:10 in New York. It is Thursday, first day of December 2016, and this is the Daily Report for Gold and Silver. We do have a mixed bag again in the precious metals markets, with gold trading fractionally lower, actually now trading in essence unchanged, and silver trading up just a little bit. That all in the light of a weakening U.S. dollar today. First to gold, continuous contract of gold, 1173.80, putting it down about 10 cents on the day. The low 1162.20 and the high 1178.40. Now, that's the continuous contract. You can also see that the continuous contract is going off February 2017 gold. I've just pulled that up. And as you can see, 1173, 1174, you have the same pricing. So we have moved on our continuous contracts, and now we'll use that instead of this February page. As I said, nominally, fractionally lower on the day. Silver, on the other hand, is trading higher today, up almost 10 cents at 16.57. It's up roughly 0.53, a half a percent, up about almost a dime, with a low of 16.30 and a high of 16.73. And that's all in the eyes of a weakening U.S. dollar. Dollar well below 101 at 188, off 0.6%, and it has broken hard over the last couple of days. So traders, even with this most recent decline in the U.S. dollar, gold has not been able to find footing. It has maintained lower pricing and still remains under pressure. Now, we're starting today's show off by looking at the dollar index. You can see the activity we have seen so far this week. That's this red line. We did top out at around 102 on the dollar index. That turns out to be the high. The prior highs to this 102 have been roughly at 100 to 100.50. We had that really at the end of 2014. We also had that occurrence towards the end of 2015, giving us a double top in the U.S. dollar index, roughly at this price point. I've extended that line. As you can see, it is that thin line that comes in right here, and that represents that low. And so we are matching the low, but I would look for this as a level that we'd want to see if the dollar can hold a supportive area. If it breaks below this particular price point, we could see another couple of percent drifting in terms of the current price of U.S. dollar, the dollar value. Now, how did that reflect gold trading? And to really illustrate that, I've gone ahead and pulled up the Kitco Gold Index. And what you can see from that is, even in the light of a weaker U.S. dollar, gold was unable to eke out any kind of a profit today. Now, this is looking at spot. Spot is currently, in terms of this recording, trading off $1. That's the net change. But the net change is a little bit deceiving because it is a weakening U.S. dollar that actually provided over $6 of value to the price of gold, but normal trading was greater than the value gained from a weakening U.S. dollar, and that's how, of course, we're getting this net change. The other thing that's noteworthy today is silver is still trading above the curve, meaning it is able to overcome slightly the dollar weakness, and platinum is also benefiting, trading higher on the day, with palladium getting hit really hard in terms of percentage drawdowns. Certainly the leader today, off about 2 3/4%. Which brings us to our current gold chart, this being a weekly chart. And traders, I am not pleased to report, but must report to you that we were in fact stopped out of our long trade. I was under the belief, as we went into the beginning of this week, and on Friday of last week, we hit these lows that really eloquently matched this 61% retracement. You can see that right here. Now, you can't see it in a weekly chart. In fact, we'll go ahead and convert it to a daily in a second. But then on the first trading day of this week, we had a substantial increase, trading up $15 or $16 on the day as it opened in Australia and moved to Hong Kong. My belief that that was a real signal that the dollar was beginning to break and that we would see the market really pivot and bounce off of these lows and move to higher pricing. Of course, that wasn't the case. We can easily see at this point these lows that came in far below it. Now, we have closed above this particular price point, and I am still under the belief that there is a high probability that the market will find support in this area. We do not have technical confirmation at this point that that occurrence is actually transpiring, and that all in light of the fact that the dollar did in fact break, but we did not get follow-through buying in gold. And that was really evident today when you consider the fact that gold was trading down more than the weakening U.S. dollar was propping it up, giving it a fractionally lower close on the day. If you take a look at the opening letter today, what I really wanted to highlight and illustrate was the fact that if we look at seasonal tendencies in the metals markets, and we have been focusing on this over the last couple of months, Typically, gold prices tend to decline going into the final quarter of a calendar year and typically bottom out at the end of that year, meaning November, December, or beginning of the next, meaning January, February. That 4-month window is the time cycle that we have seen on 2014, 2015, a really strong bottom in the market, or in the case of 2015, or in the case of 2014, from prices moving up from the beginning of January 2014 into, I believe it was February or March, where it hit its yearly high in 2014. So it's certainly something that we need to keep our eyes on. We will remain flat, of course, as we go in over the weekend. We will reassess both the technical studies as well as the most current price action in the market, and from there determine our next best move and strategy. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.